Welcome back, my friends. The news today is that the U.S. national debt is rising by $1 trillion about every 100 days. The nation's debt now stands at nearly $34.4 trillion as of Wednesday. Since June, the last two $1 trillion jumps occurred in about 100 days. Actually, I am reporting this as so-called news, but it's not really news. The U.S. national debt has been piling up to scary levels since the onset of the pandemic. This is a huge problem and everyone seems to be ignoring it, especially buyers of U.S. Treasury bonds. In this video, we take a closer look at the state of U.S. national debt and some of its implications. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. The debt load of the U.S. is growing at a quicker clip in recent months, increasing about $1 trillion nearly every 100 days. The nation's debt permanently crossed over to $34 trillion on January 4, after briefly crossing the mark on December 29. According to data from the U.S. Department of the Treasury, it reached $33 trillion on September 15, 2023, and $32 trillion on June 15, 2023, hitting this accelerated pace. Before that, the $1 trillion move higher from $31 trillion took about 8 months. U.S. debt, which is the amount of money the federal government borrows to cover operating expenses, now stands at nearly $34.4 billion as of Wednesday. The U.S. national debt has reached a staggering $38 trillion as of January 2023. Let's delve into why this debt is a matter of concern. Here are some facts about the budget deficits and debt accumulation. The national debt grows when the federal government spends more than it collects in tax revenue. This results in a budget deficit. While deficit spending can stimulate economic growth in the short term, it also adds to the debt burden. But what is the impact on you? Reduced economic opportunities. High debt levels can lead to reduced economic opportunities for Americans. As the government allocates more funds to debt servicing, it has less to invest in education, infrastructure, and other critical areas. Higher taxes. To manage the debt, the government may raise taxes, affecting citizens' wallets. Inflation and eroded confidence. Excessive debt can erode confidence in the U.S. dollar and lead to higher inflation rates. When the debt becomes unsustainable, the government may cut spending on essential programs, affecting citizens' well-being. If the debt-to-GDP ratio becomes too high, consumer and business confidence in the economy may decline. This can lead to financial market turmoil and higher interest rates. When the debt reaches the debt ceiling, the nation faces the risk of default. Congress must raise or suspend the ceiling to prevent this. So what are the components of the national debt? Debt held by the public, owed to Treasury investors including U.S. citizens, foreign governments, and international investors. Intragovernmental debt is debt owed to other government departments, e.g. Social Security Trust Fund. While some debt is necessary for economic growth, excessive debt can have adverse effects on individuals, the economy, and global financial stability. Bank of America investment strategist Michael Hartnett believes the 100-day pattern will remain intact with the move from $34 trillion to $35 trillion. Little wonder debt debasement trades closing in on all-time highs, i.e. gold 2077/O's, Bitcoin 67734, he wrote in a note Thursday. Spot gold is currently hovering around $2,084 an ounce, while Bitcoin was recently around $61,443. The cryptocurrency in February closed out its best month since 2020, briefly trading above $64,000 on Wednesday before pulling back. Inflows into crypto funds are on course for a blowout year, with an annualized inflow of $44.7 billion so far this year, Hartnett noted. Moody's Investor Service lowered its ratings outlook on the U.S. government to negative from stable in November due to the rising risks of the country's fiscal strength. In the context of higher interest rates, without effective fiscal policy measures to reduce government spending or increase revenues, the agency said. Moody's expects that the U.S. fiscal deficits will remain very large, significantly weakening debt affordability. The U.S. national debt and deficits are subjects of ongoing debate and concern. Let's explore the sustainability of these financial obligations. Here are some facts about deficits and debt accumulation. When the government spends more than it collects in tax revenue, it runs a budget deficit. These deficits contribute to the national debt. A moderate deficit can be sustainable if the economy grows at a similar rate. However, persistent large deficits can lead to an unsustainable debt burden. What are the factors influencing sustainability? Economic growth. Robust economic growth generates higher tax revenue and helps manage deficits. Interest rates. Low interest rates reduce debt servicing costs. Conversely, rising rates constrain the budget. Investor confidence. If investors lose confidence in U.S. debt, it could become unsustainable. Then we need to consider debt to GDP ratio. The debt to GDP ratio compares the national debt to the country's economic output. A high ratio indicates potential unsustainability. The U.S. debt to GDP ratio has risen significantly, but it remains below that of some other developed nations. But what are the challenges? Demographics. An aging population increases entitlement spending, e.g., Social Security, Medicare, impacting deficits. Healthcare costs. Rising healthcare costs strain the budget. Political will. Addressing deficits requires bipartisan cooperation, which can be challenging. Prudent spending, tax reforms, and addressing entitlement programs. Policies that promote growth can enhance sustainability, balancing debt reduction with essential investments. While the U.S. debt and deficits are not immediately catastrophic, addressing them is crucial for long-term economic stability and the well-being of future generations. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.